taking an unconventional look at stocks, property, bonds, economics, and more. This is the Total Money Management Podcast with Steve Moriarty, Tom Hill, and Jacob Senior.
Welcome back to another episode of the Total Money Management Podcast. Now, we touched on last podcast that this year we're going to be focusing a lot more on current events. Now, those who are already subscribers, you're probably getting weekly updates from us anyway in the format of the week that was. And what we're looking to bring you is, just a fortnightly update, what's happened, what matters, and what things are worth paying attention to.
Bravo. Righto, who's kicking off? Jacob?
Oh, well, I think we'll start off with the big issues from the end of December. I don't think we quite covered that. We've talked about them broadly, but there's a few things that kind of wrapped up 2023. It was decent for the financial markets, but a lot happened.
It did. Oh, the biggie is the Santa rally. That's always the big one this time of year.
Yeah.
Which now it's January. We can look back and go, how did the Santa rally go? So it depends. It always depends. The Santa rally is actually the week between Christmas and New Year, which wasn't that hot. But in the context of what we were talking about mid-November to the end of the year, it was a bit like, who gives a shit? The market's going gangbusters.
The last 3 months were insane anyway, so no one gives a shit about anything.
Santa can do what he bloody well likes. We're all up. So I think, generally it's been pretty good. But I think... in terms of, the Santa rally is one of those stats that you see quite a lot on the annual basis.
Because it's almost expected it needs to go up in December.
Yeah. Well, see, the original argument was it was between December 25 and January 1, right? That was the Santa rally. But what happens is, like with all... I shouldn't say all, but with most quantitative strategies, once it gets found out, it gets absorbed and you lose the arbitrage, right? So imagine if I said to you, listen guys, every year the Santa rally happens, December 26th. So what do? You buy on December the 18th.
Yeah.
Right? Well, now everyone's buying on December the 18th. So it goes up on December the 18th, so what do? You buy on December the 9th or whatever it is. So in other words, the Santa rally starts about mid-November, right? Because everyone's buying it. Because December is also one of the best months in the stock market, right? And so everyone starts buying in November for the December rally, right? So you get all of these changes that just happen. Right? But it's always just an interesting point this time of year.
Yeah, I think late December, sorry, not early December. I can get my times mixed up. We've been talking a lot this year about deglobalization, how that's going to bring a slump into the market, how we can react to it. And I think it's important just to cover that briefly on, how what's deglobalization doing towards the end of 23 and what's it going to look like for 2024 from an investment perspective so we can get our ducks in a row.
Yeah. I think... Well, from my perspective, it continues on. I don't think we're going to find 2024 completely different from 23 in that deglobalization idea. I don't think you're going to wake up and go, "Oh, that's all dead now.
We've deglobalized."
Yeah, we're all friends again. I don't think that's going to happen. I think we're going to continue on, and there's a couple of articles, or I think Jacob or Tom, one of you were talking about the iPhones not into China or something.
Yeah, well, what's the company? ASML, the semiconductor chips that that Dutch company make. Basically, the American government have said absolutely no exporting out to China.
Yes.
And
cancelled existing orders, if I remember correctly.
Yeah, so I mean, what that actually means is that you're an investor in ASML, and you're now thinking, well, shit, we were expecting 10 billion orders to go through, and now we've only got 3 billion orders. What does that look like? How does that impact the market? Or more importantly, how does that impact my shareholdings?
Yeah, I think that to me, there's a few things like. One of the big themes coming through in 2024 is metals, and by that meaning lithium, rare earths, the rarer metals that you need to make iPhones, right? And semiconductors. who makes the best semiconductor machines is ASML, right? So I sort of think of metals and semiconductor chips as the new oil, right? And so again, you've got to tie that back to the military stuff, right? Because you don't want to give China the best chips to put in their military weapons, right? Because all the weapons now, the missiles, are guided, right? And you need the top semiconductors for that. And that's the whole point, right? So from my perspective, that's a really provocative act when the American government says to a Dutch company, don't sell those machines that they've already ordered, don't send them to China, right? You know, that's
yeah, it's a big statement. What I don't actually know what. Well, the public don't know anything about this and how it impacts them personally. So, both in China and America and everywhere else in the world. So, like where my head goes is, well, what does it mean for the working man?
Well, it basically let me just give you another example. That's the American government saying to a Dutch company, don't send the stuff to China. Okay, so China, which I think I wrote about at the end of last year, or maybe this week or something, the Chinese government said to their workers, don't take iPhones to work, right, in state organisations. Well, 70% of China's state organisations. So in other words, you've got, you're invested like the old Warren Buffett, you're invested in Apple because, China's a growth sector and, blah, blah, blah. Now you've just lost all your, a huge portion of your iPhone market, which means you'll lose a huge portion of your iPad market, which means, so when you look at that as an investor, what you're doing is particularly with these growth companies, is you're projecting out into the future. Apple's going to be worth, it's going to earn, whatever, $20 a share, whatever it is, right? And now you're going, oh, actually, no, it's only going to earn $18 a share because of the problems in China. So that changes, when you do a discounted cash flow, that changes a lot, right? That changes the valuation from, oh, hang on, it's not worth 300, it's only worth 270. And again, you get a general pessimism now around Apple, right? And you're starting to see that. Add in the fact that they're one of the Magnificent Seven, probably going to decline anyway.
Huge part of the Magnificent Seven anyway.
Yeah.
But to me, it all folds into what we talk about, the 4 Cs, and it feeds into conflict.
Absolutely.
And if we're talking at a macro level, and these little side deals and business deals that governments are doing that don't impact the 99% actually do,
yes,
when it happens, and then they start to see the decline in share price, and then that fear and greed comes up where people get all scared, start selling, and that's when you start to see a trickle effect, a waterfall effect, where everyone's selling
absolutely
off. And that's why it will impact the common man, in my mind anyway.
Yep. And that's why I said to you, that's why I said in the last one, plus Plus 20 or minus 20 is my prediction.
Yeah.
Because that's, we've got, the markets are much more momentum orientated, whichever word you want to use. And that's what I mean. Everybody's in the Magnificent Seven. Well, if that starts to change, and, Tom, you might want to have a look at the technicals on one of these Magnificent Seven. But all I'm saying is that you, at some point, they've had such a stellar year in 2023, and everybody thinks they're going to continue on in 2024. Okay, that's fine. But that's where you get the big change in markets, where it goes from being great to good. Or it goes from being absolutely disastrous to just bad.
Yeah.
Right? It's not necessarily going from good to bad or bad to good. It's just going an increment in the other direction, where people go, oh, actually, it's not as good as I thought it was. And that changes the whole thing. And then you get these cascades, information cascades, where suddenly everybody's talking about how bad Apple is, and, oh, mate, I don't know about Apple's future. And then, the share price starts to fall, and then it just gets its own momentum, downwards anyway.
Interesting. When was that announced?
What's that?
That China said stop bringing your iPhones to work.
I think it was late December.
Okay, so that coincided with the 9% drop, which was also at the previous high.
Well, yeah, it may well be, but I think what you were saying before, Jacob, is really important, because I think what's happening is this is why it's so important for investors to understand about politics and geopolitics, because it's now impacting companies, right? America's got a manufacturing boom, right? Why? Because they're now building semiconductor factories, all of that stuff where everyone went, nah, you're just getting in China, mate, don't bother building a factory. Well, now they're doing all of that, right? That changes the whole focus of everything. Now there's more capital expenditure. Oh, well, how's that look on the balance sheet? You know, what are the government tax credits? What are the subsidies? If Donald Trump's elected, will it be the same? Right? There's all of that sort of stuff, which, as I said, over the last 30 years, I can tell you, no one really bothered with, because we were all friends. So, you know, it was a lot different.
Interesting.
I think you're going to go, Tommy?
No, I was just going to, I know the next point in one of the reviews from mid to late December was you highlighted the NASDAQ, and, the last 11, out of the last 11 years, 5 of those, it had done over 30%.
Yeah.
With an annualized return of 19.3%.
Beautiful.
Over the last 11 years.
Imagine.
That's ridiculous. What's that? Doubling your money every 3.5 years?
Well, you
Roughly?
think of it's 19% compound.
Yeah.
You double your money in 5 years, and then you double it again, right? So you go from 100 to 200, and from 200 to 400. So you've gone from 100 to 400. So, yeah, no one's whinging about the NASDAQ, right? Just keep that party going, brother.
Oh, but it can't. That's the whole reason why you're being pessimist, because it can't just keep doing that.
I believe Steve's words verbatim were, "I am 100% confident that this does not continue for the next decade."
Absolutely.
100% confident that it may or may not continue.
Well, look, everyone just remember this. When we're reviewing Steve in 11 years, let's just remember
You'll know. Yeah. You'll be able to come to the aged care facility and say, you were right, Papa. But seriously, I mean, if you have a look at since 2009 in IT, and they also put them in telco services too. So just be careful when you.
Oh, do they? The telcos in
ETF, yeah, right. Because you've got Facebook and those things, right? Because they now say, that they're communication companies.
Didn't know that.
Yeah, that's why you've got to be a little bit careful. But the point being that it's absolutely murdered it the last 13, 14 years. It's just absolutely killed it. And I think we said before, like I'd say to people, you really only need one good secular bull market, and if you're smart, you make 300 or 400%. Then if you're clever, you'll just manage your money so you don't do dumb shit.
Yeah.
Right? Because you want to retain that wealth. It's very rare that you get people who go, I just made 1,000%. Now I'm going to go and whack it all on red. Right? There are people who do it, but they must have ulcers, quite frankly. But my point being,
they got massive stones.
Well, yeah. Well, the richer you get, generally, the more conservative you get.
Yeah.
Right, because you don't want to lose what you've already made, and it's a really good idea. Because if you've got enough money to live on, you don't need to go out and speculate unless you want to do it for, fun or something like that. But my point being, I don't think IT, we're still going to have AI revolutions and all that sort of stuff, but it's the stuff we always talk about. What's the value, right?
Yeah.
I know the price. What's the value, right? That's the important bit. And I don't think, and as I said, it's not me being a genius. It's just me looking at history and going, every sector has a really great 5 or 10 years, then they fade away. Why? Because they become overvalued.
Yeah. Or in this circumstance, you got the tech sector. I mean, tech's not going anywhere, right? There's always going to be innovations. But what we're saying is that it's heavily weighted by the Magnificent Seven, and that might change in the future. So therefore, there'll be a slight decline, or it'll just be stale for a bit.
Yeah,
Doesn't mean it's going to go nowhere. But there may be a new Magnificent Seven, and why can't I say that bloody word? Magnificent.
It's because you're English.
Magnificent. Anyway, there could be a new 7 in 10 years.
Yeah. Absolutely.
And there'll be a change of hand or a change of guard.
Yeah. You often see that there's data that comes out. It's always really good about. They look at what the top 10 companies are every decade, and like in the 70s it was oil. It was Exxon, it was BP and Shell and those things. Then in the 80s it started to get the IT flavour, right? Because we then got computers and that sort of stuff. So you find the 90s, I think it was banks. In the 80s, I think there was one or two or even more Japanese companies, right? Because they were in a bubble, right? And so this decade, 2020 to 2030, will be interesting to see what sector comes out on top. I still maintain it's going to be energy myself, or commodities, if I can put it to you that way, and gold.
Yeah.
Right, which we've talked about over the last 2 or 3 months.
So not Bitcoin.
No.
Digital gold.
Digital gold.
Digital gold. Well, you young guys like that stuff. I don't, but I'm happy to leave it to you guys to talk about. As I always say, I'm not the smartest guy in the room. You guys probably know more about it than, and the reality is too, it's a bit like, well, who cares if you're making money out of it when,
Well, we just approach it systematically. It doesn't matter if it's Bitcoin or Zitcoin. It's something that we look at and go, there's an approach we can apply to this. It works in the traditionals. Let's see if it works here, and it does. So.
It's fun because it's 24/7, 365 days a year.
Yeah.
And very volatile.
But see, it's not funny because I hear all of that and just go, no way.
I want a day off.
You guys are half my age. You guys are going, oh man, that's what we live for. 24/7 volatility. Whereas I look at it and go, no, just give me a really easy life.
we love
bonds at 6%. All right.
We love the threat of a potential, 1 a.m. drop.
But isn't that
while we're asleep?
But that's so important because that's what lots of investors are doing, right? There's a lot of that going around. And my argument is you see that in bull markets, right? Everybody's trading and it's the same. I think I might have said in the last episode, it's the same with Australian property. You cannot turn a bloody corner without someone talking about property, right? And my argument is you've got to look at that, and because that's what grounds you in, okay, I need to think about the value here, not the price. And I can tell you some of the prices of some of the suburbs in Brisbane that I know of when I was a kid and I lived in one of them are just absolutely mind-boggling. I just look at it and go, what? 1.1 million? You've got to be kidding. There was one I saw the other day that was 20... Look, it'd be half an hour from Brisbane City, right, from the city. And it's, it's not a salubrious suburb. And it's like knocking over 1 million, 1.1 million. I'm just looking at it going, that's ridiculous. Right? Well, but there's lots of people going, this is really exciting and, we're going to renovate and blah, blah, blah. But what do I know? I'm old.
Well, you had some comments in there as well about the Red Sea. I have not been following that. Why is that important?
Because there's when you look at oil, a lot of it goes through because it's in the Middle East, right? A lot of it goes through the Straits of Hormuz and the Red Sea, and there's the equivalent is Russia, Ukraine is the Black Sea, right? There's the Straits of Malacca in Asia. These places, and it gets back to what Jacob said before, where the average man or woman in the street doesn't realise how tenuous globalisation is, right? That's what governments realised in COVID, right? Governments went, holy dooly, what do you mean that we've got to rely on China for, our masks?
And sanitizer and all sorts of other stuff.
That's what I mean. See, and that's where the governments went, well, you can call it deglobalisation, but we're calling it de-risking. And the reason what they're saying is, well, we've got all our eggs in the one basket. Dude, that's a huge risk, right? Now, the Red Sea is the commercial ships are under attack from the Houthi rebels, right? So we're not going to go into that because we'll be here for 3 days.
Sounds like a Star Wars episode.
Well, when you put in Shia and Sunni tribes, and the Middle East is 25 episodes on its own. But the point being, now the Americans are sending in aircraft carriers and have said to Iran, righto, we get the point. If you guys want to, continue these attacks via your surrogates, which is the Houthi rebels, then we're going to respond, right? And so what the Americans are basically saying is, righto, pardon the French, but there's a saying, fuck around and find out, right? And what the Americans are saying is, listen, if you want to do that, you're going to find out. Now, the Iranians do not want to get into a stoush with the Americans. So that's the point. The ships now have to sail around, go the long way around Africa, down the bottom, and continue on again. That adds cost. It adds, where's my iPhone? Oh, sorry, don't. It's on a boat outside South Africa at the moment. It'll be another 2 weeks, right? Yeah. Inflationary pressure. Okay, well, that then impacts into a company valuation. Oh, well, we're not going to sell 1 million iPhones. We're going to sell 500,000 because we can't get supply. So this is all of that issue about de-risking. That's why the Americans are building their own semiconductor facilities now, because what they know is they're completely reliant on Taiwan, which is Taiwan Semiconductor Manufacturing Company, TSMC, right, who do the creme de la creme in combination with ASML.
Yeah.
Right?
Yeah.
That's why the Americans are looking at going, hang on, we're basically being held to ransom. Ransom's not the right word, but we've got all our eggs in these baskets.
It's a duopoly.
Yeah, this is not a good place to be in, so we need to build our own. Yeah. So that's what's going on, right? And that has a really big impact on the way companies operate, because if you go back in history, you see how important oil companies were as basically a commercial arm of government, right? So governments would lean on Exxon Mobil and say, listen, we'd like you guys to do X, Y, Z. That's what's going on now again.
Yeah.
Right?
Well, it reminds me of, in the Red Sea and the shipping attacks, of the Evergreen ship, was it last year or the year before, which got stuck sideways in the Suez Canal. Yeah. And, I mean, that cost about 550 million in expenses and damages in the however many days that it was stuck there. And that's not even including the expenses and damages that it caused by other ships not being able to come through.
Yep.
So what that means is that if there's more and more attacks, and it means it's more dangerous for oil shippers and cargo loads to go through the
insurance
canals.
Is the big issue.
Yeah,
nobody will insure the ships.
Exactly,
right.
And as well as that it takes longer. Supply and demand goes all out of whack.
Yep, absolutely.
And that's how that would therefore something that might cost $5 could cost $6 in 2 months' time.
Yep.
Literally because the ship can't go through a canal.
Well, that's why you think of the oil price. Right, everybody at the moment, oil had oil's now, I don't know what, 72, 73 or something, right? Yeah. But in a blink, it can go to 80 to 90. Now, a lot of the reason why inflation is dropping or has been dropping is because the oil price has been declining, right? But you think about what happens to inflation if oil goes back to 90 or 100. Now, I'm not saying it is, but what I'm saying is, as we said before, the fragility and the asymmetry is they're not going to rush through 1 million ships through the Red Sea and we go, it's all okay again, cool. There's much more of a chance of going, okay, we're all in on the Middle East, we're all having a big stoush and oil's at $100 and semiconductor chips are, in short supply and blah, blah, blah. And as I said, this is why geopolitics is important, because while you may or may not have experienced it, it leads down.
It can have flow-on effects. Yeah,
absolutely.
I think if conflict like in 2023 has anything to do with it, then oil could very well be back at $100.
Absolutely,
in a snap of a hat. But anyway, that's enough about conflict. COVID. Let's talk about that. That's all fun and games, isn't it? It's raring again.
New strain. Vaccine's not working.
Well, yeah. I mean, I'm a little bit surprised at I went and had a look at the numbers. 11.5 million people have had COVID. right? We're a population of 26.
I'm surprised they haven't all.
Yeah.
Well,
they may have. They're the tested ones, right?
I've had it,
yeah,
4
good point.
times or something?
Yeah.
Yeah.
How many people have had COVID and
How many people? Yeah. so
not
many
talked
people.
about?
Yeah.
But the thing that really worries me, and this is why I made it one of the 4 Cs, is because of long COVID. Mate, there are young people are dying of heart attacks. If you read about it in England, let me just read you this bit. UK finally admits that new super mutant COVID strain is, quote, very severe and hits, quote, young and fit people hard, and that new strain is so mutated it's basically a new COVID virus. As NHS, National Health Services in the UK, see winter 2020 level emergency ambulances call-outs. Seen it in the news?
No, everyone's bored of talking about it now.
Well, but that's what I mean. You know, this is the stuff that happens in markets. Oh, it's all going well, mate. It's all fine. No worries. Oh, Cape's at 33. Yeah, it's all cool. Don't worry about it. Boom.
Yeah, well, the trouble is, right, when we did focus on it, it just got too hard. Like, people had to close things. There were too many rules. Everyone got really depressed.
Yep.
So what's the new thing? Like, you know, you hear people say all the time, if I don't test, I don't have it.
yeah,
But, you know,
that's it. Literally
It's actually
is
a thing.
Yeah.
but that's what I mean. Don't ask, don't tell. But it's, in all seriousness, long COVID is now really starting to impact. And what does that do? Well, it shrinks the labour market.
Shrinks the labour market, puts straight on the healthcare market, which is why I'm so confident the healthcare will do pretty well. Not purely because of COVID, but the effects of
Absolutely.
everything to do with that. People are depressed. People are anxious. They're losing their jobs over not being able to turn up. And I think it'll have a direct correlation effect on people seeking high quality healthcare so they can get back to work quicker.
But it also fits in, Jacob, in my mind, saying you can't leave, like we've said, you can't leave that level of healthcare to the market. Where you say to people who have got long COVID, oh, well, if you can't afford it, bad luck, dude. You'll just have to lay in bed for, you know, and lose your job and become a welfare statistic.
But we still need you to pay your mortgage, which has gone up 15%.
Yeah, and but the government's going to have to step in and say, all right, we need new HEP filters in all workplaces. And the workplaces go, oh, my God, that's terrible. It's going to cost us a fortune. Okay, and then they might say, okay, look, I'll tell you what, Jacob, work from home. Buy your own HEP filter, right? That'll save me. And I'll reduce the rent on the building. Or, you know, like there's all of these flow-ons that I think, again, as you said before, most people are not paying attention to. And I'm not saying because they don't want to, but simply because it's not in the day-to-day media. You know, no one talks about stats, or I think I looked at them yesterday. 1,700 infections, I think, the day yesterday or the day before, right? So what I'm saying is you add those up and you go, oh, hang on, that's 10,000, 15,000 people a week, right? And they were all out there in planes and boats and, you know, going to work and going to parties. We've had Christmas parties. We've had New Year's Eve parties. Look, I know I'm old, but I just look at them and go, oh, man, that's just like a COVID tin can, right? I know, but that's what I mean. You see, we've moved past the, oh, maybe I should wear a mask. Right? It's like, oh, yes, okay. And it's like, do you know the stats? Do you know the damage that it causes? Do you know now that they're saying, remember when COVID first came out? It was, oh, young people will be fine. Now they're dropping dead.
Yeah, well, there's footballers, I'm not sure, a couple of months ago in the UK that have literally dropped dead of a heart attack in, like, the Premiership, and they're the fittest people on earth.
Yep. And there were singers doing it as well, right? Lewis Capaldi, right, young guy, great voice, has cancelled tour because he's struggling with his long COVID, right? Madonna, this is what I mean. This is where you look at it and go, man, these things are, you know, climate change. Look at the floods. Look at the impact as an investor. So what you've got to do is when you read the news, you've got to look at it and say, oh, I wonder what that means for Apple when the Chinese government bans Apple iPhones.
Yeah. And, like, I think it's fair to say the reason we're talking about these topics is through an investment lens, not just to start talking shit about how to scare people.
Yeah.
But it does directly impact the markets both onshore and overseas. When you have people that can't go to work and you have X amount of people that can't show up, it affects the labour market. So it's not just us going, oh, we need something to talk about. It really does matter, and it's worth just doing some research into how it might impact your own investments.
Yeah, absolutely. That's why I say it's when you look with a combination of high valuations, anything can tip them over. We don't know what the issue is, and that's why we talked. You mentioned, I think, in the last one about black swans, right? And predictions. You don't know what it is, and it's more likely that markets hate surprises. Well, if they know about the Red Sea and they know about Russia, Ukraine, and they know about wars breaking out in these places, generally the market will absorb that in the price. It's the one they don't know about. Last week, Japan's earthquake on New Year's Day, right, and the tsunami, right? They're the sort of things where the market goes, oh, geez, we haven't priced that in. Now we've got to price it in, and it's going to be really bad, and, blah, blah, blah. The Japanese stock market at the moment, everybody thinks it's going to have a great year, right? Long term, it's getting value, blah, blah. Along comes a, 1 in 100-year earthquake and tsunami again, right? Oh, got to change my opinion. Markets move really, really quickly.
Yeah.
And if you're not paying attention, you get up one morning and go, oh, hang on, my stocks have gone down 10%. That's why.
Yeah. Look, I think it's important all this is important, and I think next time we'll talk more about probably last week or the week coming up as well.
Yeah,
so
yeah.
There's a fair bit that'll happen between now and then, and a fair bit that we haven't covered. But if anyone has any questions about anything that we've talked about, how it might impact their own investments, head to the website, send us an email. We'll be happy to talk to you more about how COVID or shipping lanes or Apple impacts your investment. So
and Bitcoin too, Tom and Jacob.
And Bitcoin if you have any questions. But anyway, we'll see you next time. Thanks, fellas, for joining.
No worries. Cheers, folks.
The Total Money Management podcast is now releasing weekly. Follow us now on this app to stay up to date. And as always, remember, we don't provide financial advice.